Hello and welcome to another update video about Solana. I think we start with just zooming out a little bit. We start on the 4-hour chart. Solana is trying to break above resistance right now. I mean, it broke above the initial $107 level, but I highlighted to you that it's a bit of a range. We need to break above between 107, 108, and it really takes a sustained break above the range to really suggest we're heading towards 125, which is sort of the next key target after the breakout. So we take a look at that now. Looking at the structure here, we can see that overall on the 4-hour chart, we still have quite a bullish structure. The market started in June with a wave 1 to the upside, wave 2 pullback. We had that third wave to the upside, fourth wave pullback. I'm currently, as I said, assuming the wave 4 has bottomed until the market proves something different is going on. Yeah. But that's been the view because we hit the support zone and we've seen 5 waves to the upside. And it shows again that it's worth just watching what the market is doing. The market typically tells us what's going on. So if I see a 5-wave move to the upside after the market is reversing from a trading area or support zone, well, it's an indication the uptrend is continuing. So that's simply how, how we should really approach the market, not trying to predict what the market is doing, right? Because, I mean, obviously we can identify the trend, but only the market is deciding every day, every hour, every minute what's going on. But what we can understand is what are the relevant Fibonacci levels, the zones, the pivot points when the market changes its mood, for example, from a bullish scenario to a bearish one. But it hasn't done that, so it's still bullish. So the idea is that we're now likely in a 5th wave towards $190. Let's take a look at the short term to understand what those relevant pivots are. I highlighted to you earlier today that I'm bullish against the $84 level. The $84 level covers basically both short-term scenarios. There is one in which a wave 1 already topped here around the 30th of January, and in which we basically are forming a wave 2 pullback, a wave down. It would need to be an overshooting B wave now, and then a C wave to the downside. That's scenario 1. That's also why I am keeping the $84 level on the chart, because in this scenario, it could technically be that we come down all the way down to $84, sorry, while still being able to maintain the bullish outlook for a third wave rally to come. It's just a structure that's possible, not necessarily very probable at the moment, because first of all, we're pushing higher. Well, that doesn't necessarily mean too much, but what's important is that even if we have an overshooting B wave, I think it's unlikely that this C wave is so long that it touches the $84 level. I could possibly see it come back to maybe 91, maybe $88. But again, at the moment, the trend is up. So we talk about which level needs to break to suggest that the move down is actually unfolding, okay? But this is only one scenario. In another scenario, we already completed wave 1 and wave 2, and we could basically already be in the third wave, right? So this is more aggressively bullish. I highlighted to you, if we get a sustained break above 107, 108, I assume we're gonna get to 125 next, which is what might be happening. Maybe we don't even get a deeper pullback. That sometimes at some point they just break out. Okay, so you don't get, I did say that in the Matic video as well, you don't get like a 1-2 setup and another 1-2 and another 1-2. At some point they just have to break. Okay, so we may see that. Essentially, the support zones are not targets necessarily. They are simply support levels against which we can focus on higher. So to keep the more aggressive, direct bullish scenario alive, the $96 level needs to hold. That's the main level. Below $96, or let's call it $96.30, I assume this white scenario where the deeper pullback is unfolding. But we are breaking out as we speak. So, I mean, if it continues to push, we are probably already on our way to 125. First of all, however, there should be some resistance around 117 and then the 125 level. Why is that so important, that level? Well, it's important because it's the 100% extension level. This is key, yeah, for any rally really that could be impulsive. because any impulse could develop first into a three-wave move like this one: A wave, B wave, C wave, and then typically the C wave has the same length as the A wave in a lot of cases, and that's the so-called 100% extension level. That gets even more important in this scenario because it is exactly where the previous swing high in December was located. So that's an important level. Also my main target after the breakout of the inverse head and shoulders pattern, because also the inverse head and shoulders, the measured target takes us into this region actually a little higher, but it also takes us at least past the $125 level. Here we set 140, and that's also one of the key Fibonacci extension levels. So there's good confluence at 125 and then 140. These are the next targets to watch. But ultimately, I mentioned it before, I'm expecting if we get that sustained break above the neckline of the inverse head and shoulders, then I'm going to watch for the price to reach 190 plus. I actually need to delete that 152 level because that's not one of the main targets for this move. 190 plus. And yeah, so in the very short term, the trend is up in the very, very short term. And until I see a pullback, well, at least below the red line now, I assume we are going up more directly because we've had that nice breakout, and it seems like maybe it's going to get another, it's going to become another Solana weekend. We had that before, really, on Saturdays where Solana performed quite well, actually, when Solana performed quite well. You could also use this trend line. I'm going to change the color here a bit. This could also be an indication because the market seems to be following this trend line. As soon as that breaks, yeah, that might be the first indication that we get a bit of a deeper pullback. But again, that wouldn't necessarily be bearish. That would just indicate that, okay, we might do this wave 2 or even the C wave down. They would both be possible, let's say, opportunities for re-entering or entering the market potentially, in my opinion, yeah? Because they could be corrective pullbacks. It will depend on how it looks like, what the structure has done before that. But yeah, looks good. Solana performing well while Bitcoin gets a bit of a pullback. That's promising for the weekend. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.